Hi, I'm Mary Williams. I'm a realtor with Sampson Properties in Chantilly, Virginia, and today I'm visiting with George Light here at Home Savings and Trust Mortgage in Fairfax, Virginia. And I've got a couple of questions for George, and we're going to talk about why is it good to spend time with a lender before you start house hunting. George, talk to me about credit scores.
Sure. One of the big reasons that it's important to talk to a lender first is we want to make sure when your realtor is showing houses to you that you're going to qualify for anything that you potentially could look at. One of the worst feelings in the world is to see something that you love and then you're unhappy with what the payment costs or what the down payment requirements are and do not wish to proceed moving forward.
But George, I've looked up my score on Credit Karma, and I get a credit score on my monthly credit card. What's the big deal? I know where I stand.
Credit Karma and the credit scores that you receive from your bank statements are not the same as a mortgage credit report score.
No.
They don't research the bank records, the court records, judgments, collections, and they also calculate the score differently. So most of the time, the scores that you get for free are a little bit higher than the scores that you'll find on a mortgage credit report.
Okay.
So we will always offer to pay for the consumer to get a mortgage credit report that costs $32, but will be paid for by Home Savings and Trust Mortgage when they're working with Mary at Sampson Properties, and do that as a value added to our customers. In that report, it gives us 4 segments to the credit score, and it tells us what we can do to improve our score the most. We can walk through the consumer to help them get their credit score up to the point where they can either get qualified for a home or even get qualified for a better rate.
And that is really important, George, because just the difference in 5 or 10 points on a credit score can make a difference in an interest rate.
Exactly. And so we want to definitely dissect the credit score up front and help put the consumer and the home purchaser in the best possible position to buy a house.
Okay, fantastic. What about people, let's talk about stability of income, right? Because you told me that was very important. And people who have an hourly wage job might be considered different than those who have a salary. And what is the difference with stability of income?
Stability of income is generally defined as 2 years of work in the same profession and in the same kind of payment stream.
Okay.
And what we mean by that is a salary person with 2 years at the same company. The rules change for self-employed and for hourly people. If you had a borrower that was self-employed and switched over to becoming a salaried employee and had a 2-year history between the 2 jobs, you would be able to use that income immediately.
Okay.
If we had someone that was 2 years of an employee and recently became self-employed, that person would need to wait 2 years because you have a self-employed business being viewed as a non-stable entity because it has to have a 2-year history.
Okay.
Most self-employed businesses have struggles in the first 12 months.
Right.
So that's the way credit underwriting reviews those two.
Okay.
On an hourly basis, if you're at the same company for 2 years, they're going to take an average of your income over those 2 years. If you switch companies, it becomes more problematic, and we would need an underwriter to look closer at how to calculate the income.
Okay. So it's important to know, consumers, how the length of your duration at your job affects your ability to borrow money, and it's important to understand the difference between a credit score you look up yourself and what a mortgage lender is going to be looking at.
Absolutely.
Is that accurate?
Absolutely.
Okay, let's talk about the big question, cash required for purchasing a home.
So this is a major problem with underwriting in today's environment. Cash required has to be seasoned money in the bank for 2 months.
Or what does that mean? What does seasoned money mean?
It means that it has to be in the account for 2 consecutive months, the same account with your name on it as the borrower, or we have to be able to document where the money came from. A pay stub is very easy to document as
Right.
new money, and that's an acceptable source of funds. If you sold a boat or a car and just deposited the money into your account, we would not be able to use those funds unless we had a copy of a bill of sale, copy of an appraisal of the item sold, and the deposit slip showing the money going into your account. So we want to make sure that when we're working with a borrower that we've helped go through their bank statements, their stock statements, and their 401k statements to make sure that they actually have seasoned funds available to go to closing. Please keep in mind there are loan programs and loan products that require no down payment, such as a VA mortgage for veterans,
Right.
or the VHDA loan product in Virginia that allows someone who has not owned a home in the last 3 years to buy a home with no money down, and many other products that will be advantageous to home buyers if they just give us a call to find out the details.
Right, and it really is important to know that you don't always have to have 10% or 20% down in order to get a foothold in home ownership. And a knowledgeable lending institution like Home Savings and Trust here in Fairfax, they can help walk you through the best or possible courses for your particular situation.
And then what's great about it is there is no commitment on your part.
Right.
So other than your time to get an education, we want to give value to our customers up front, and then we hope to earn your business in the future. But there is no commitment on your part other than just taking from us the information that will help you become a more educated consumer, provide you the best possible credit score, and the loan that's ideal for your family's needs and services.
So home buyers, know before you go out house hunting and get your knowledge together about your scenario, and know before you owe. And those are words right from the Consumer Protection Finance Bureau. And there's some great websites out there to educate consumers about the home buying process. And there's some great local resources as well that can look after your best interests. So thanks a lot. This is Mary Williams, Sampson Properties in Chantilly, Virginia, and
George Light with Home Savings and Trust, and we're here to answer any questions that you might have about any topic on home buying and the mortgage process. Thank you very much.
feel free to contact me at 703-795-2112 if you have any follow-up questions. Thanks, George.
Thank you.